in many ways, they're competing directly with banks in that sense because they're going to hold the customer funds.
Hello, I'm Adam West, industry news editor for cardrates.com. Today I'm here with Ellen Linardi, the Chief Product and Technology Officer at Synctera, where we're going to be discussing embedded payments. Before we jump into some of the questions I have, though, I was hoping you could tell me a little bit about Synctera and what your team does there in terms of embedded payments.
Yeah, on embedded payments, essentially think of it as a platform and infrastructure that enable bank and fintech to work together. So think of it as like bank providing the regulated like infrastructure, entity, capability, bank account, issuing all of the stuff, and fintech who essentially provide the product to the end user customer. Right? I think of it as like democratizing like banking in some ways, similar to how payment evolution has gone.
I do think that there is a lot of confusion over that term embedded payments. It's like relatively new in the grand scheme of things. So, uh, has the term embedded payments kind of evolved?
Yeah, I think there's embedded payment and then there's embedded finance. And the two sort of is the continuum and spectrum of each other, right? If I think of even back in the days prior to my role at Synctera when we were at Clover, we serve and help a lot of like ISV actually help embed payment itself within their software. And Clover, you could say, was a platform that embed payments similar to Square and everything else into the workflow. So I think when I think about embedded payment, it's bringing payment to wherever consumer or businesses are, right? Meeting people where their payment is actually happening. Sometimes it's physical, sometimes it's digital, it really doesn't matter. So that spectrum has evolved over time to go beyond just payment into your financial life altogether, right? So I think the terms itself that actually not only evolve, but like extend itself beyond payment into the holistic financial life of, every consumer and businesses out there.
Do you see embedded payments mostly as a checkout phenomenon, or is it actually a data and risk revolution that changes underwriting?
All of the above, right? So I think, payment goes beyond the dollar amount that's exchanged into what was actually purchased and basically customer and consumer behavior, right? And so whether you're talking about bill payment, whether you're talking about like pattern on when you are likely to spend and, whether you're talking about the item that you're purchasing and what you're more likely to therefore purchase. It goes far beyond financial and sort of like the payment exchanges into actually behavioral understanding of how your consumer and user are transacting in their commerce life. So it's
Yeah, it's really
much more
interesting.
holistic than that.
Yeah. Um, I think whenever there's a new form of payments, you always have to look at the competitive landscape. Who are the winners and who are the losers as far as how this might shake out? Who would you say is the most threatened by embedded payments? Would it be more traditional banks or card issuers, maybe BNPL players, or maybe something completely different?
Well, if I think about banks and issuer, they're not being disrupted necessarily by payment provider who are only playing in embedded payment. If you think about players like Square, it is not the fact that they're doing acquiring and helping merchants accept payment that actually disrupt bank. It's the fact that after they collect their payment, they extend their relationship into embedded finance, where now they're like, you know what? Now that I've collected your money for you, I can also help you manage your funds, right? So in many ways, they're competing directly with banks in that sense because they're going to hold the customer funds. But I think that's also where the evolution of I think our industry are going to go from embedded payment into embedded finance, where a lot of SaaS providers, solutions, software out there are going to move from payment acceptance into actually helping their end user, whether that's a business or consumer, manage the holistic financial life, right? I think of it as like accounts payable, accounts receivable. Payments is about taking an accounts receivable. Once you've done that, you're like, hey, I can also help you with your account payable side.
Well, I think there's definitely going to be disruption with this. So, it'll be something that we'll be able to watch as it plays out. But as I mentioned, I read that payments report today and it was saying like 90% of fintechs are using embedded payments. So, can you just talk about the proliferation of this? Maybe what's led to such
Yeah.
growth?
So I felt like we were on the tip of a lot of those evolution back in my day at Clover, right? And so when we first started, when you go to a terminal and you go to the store, you see like a Verifone and Ingenico terminal, you tap on a separate system, you see the merchant then ring up the transaction a separate one and punch in $20. right? And so the first concept of it is to say like, hey, why is the payment and software separated, right? When I walk into the store, can't those two things be consolidated into one? So I think the first evolution is actually the consolidation of like payment acceptance and software that's being provided, even in a physical retail presence and everything else to live in one place. And then I think as it progressed along, right, a lot of e-commerce players, there was like think of it as like payment in physical store and digital payment that was happening. So the two historically is run in like parallel track until as we approach COVID, this whole thing imploded. And suddenly, when nobody's showing up in store, basically retail shutdowns overnight, this consolidation, I think, between physical payment and digital payment came together. Right. And that has really, really changed, I think, the evolution of like how payment proliferation goes from just being a mechanism of exchange into something that's more tied to the identity of the consumer that's transacting with you. Right? So concept of wallet, the ability to actually follow your consumer, whether they're coming and walking in store or purchasing a product on a e-commerce website. Now it's ubiquitous and like every consumer would expect that whether I go in store or I buy something online and I walk back in the next day to return it, I expect my payment to work seamlessly. I expect my identity to be recognized. And I think it's no longer an add-on. It has become an expectation in the market.
Yeah, and it seems like it's gotta be great for these fintechs. I mean, you're looking at it from the perspective of, really, being able to capture a lot of data, that you can use for driving loyalty to your brand, and that seems to be one of the big impetuses behind this.
Yeah, I think a lot of it is like convenience actually and ease of use for the consumer, right?
Mm,
How do
okay.
I, as a consumer, regardless of meet them where they are is what we used to talk about, right? So as a consumer, one day I might decide to walk into a Gap store. The next day I'm browsing online. Maybe I browse partway and I go in store and I want to pick it up and return it. So the combination of like a physical and digital experience coming together, I think is the defining moments of what's changed a lot of embedded payment.
Yeah, I just had flashbacks to how many times I heard the word omni-channel a few years ago, so
Yeah, now nobody talks about it because it's just expected, right? Like
yeah,
it's
exactly.
like what omni-channel? It's like of course it is, right? So
Yeah, it's just like, of course, every step of the way is gonna be monitored and used for business success these days.
yeah.
I want to talk about the economics here on embedded payments. So,
Mm,
who actually captures the margin on embedded payments? Is it the bank or the fintech or the platform payment network? Who's getting
yeah.
the money here?
So there's multiple parties that are involved here. So I'm going to start from the acquiring and then we're going to go to the issuing side, right? So really the party is when a payment exchange happens, it's between the business who are accepting payment and the consumer who are paying, right? Think about like that experience in store. On the merchant side, every time I run a transaction where I accept like a credit card transaction or a payment of any sort, so we're just gonna call it like card payments for this purpose, right?
Okay.
Um, there's an interchange, normally like 3.5% or some kind of fee that is paid for by the merchant or priced into your product, right? Or in some situation, merchant does it as like a surcharge where if you pay by credit card, they're like, we're going to charge you 3.5% on top of this. If you pay cash, this is the price. For credit card, we charge you a little bit more for that. So that 3.5 percentage is basically distributed between the issuing bank, so the person who actually issued the card the consumer used, right? The card brand itself, and then the acquiring who helped the merchant actually then process the payment itself into the ring. So it's distributed among like multiple different ecosystem players. And that's also why I think it's both very sticky as well as very expensive all at once.
Do you see that financial arrangement kind of evolving over the next few years? Like, there anything that's happening in the space that could change the math on this?
So, you see things like P2P internationally, there's been a lot of like more QR code based like payment that bypass Visa, MasterCard, right? Any of the card brand and do a direct like card to credit transaction. Um, the US market's a little bit different, where I think the convenience of credit card and, just how embedded that is into consumers' everyday life is a little bit different, right? Like the percentage of rewards, for example, that credit card offers from the big banks makes it very sticky for consumer to continue to use that as the mechanism of choice. We do see an evolution, I think, based on generation of how they're paying, right? Like if you go with the younger generation, the utilization of like debit programs, for example, right? Like the Venmo like model, right? Like the ability to actually just put debit information instead of credit card. It'll be interesting to see if that evolves, but because of the reward and the incentive that comes with a lot of credit card systems, at least for the US market, it feels pretty embedded that it will be there. What I think will evolve and change is the mechanism at which consumer is attaining credit card are not solely going to be just from the big banks. There's going to be more mechanism of like different kind of wallet provider, whether that's like everything from your Apple Wallet and Apple Cash, Amazon Wallet, Amazon Cash, right? Like different kinds of sort of payment mechanism and exchanges are probably going to be continue.
Yeah. Yeah, I think you're spot on with that. Okay, so let's see. I want to take a step back. So for somebody who's maybe considering getting into embedded payments, like what's the biggest misconception that founders have when they try to launch an embedded payments or card product?
Well, I'll decouple it into two things, right? I think on embedded payment, as much as possible, you want to stay out of scope for PCI, right? So there's a lot of services and providers that provide um, like holistic payment services, gateway, and everything that keeps you out of scope, right? Essentially, it's a must do. It's not necessarily it's a convenience and capability that needs to be delivered for your end user, but you want to stay out of scope on PCI as much as you can unless that is going to be what you're about, right? So if you're going to be about like a payment, then by all means own it. But if it's an adjacency task that you're doing on behalf of your merchants, of your customer, that's where players like Stripe, like Adyen, and everybody else also kind of come in to provide that gateway services. There's many options, alternative out there that you could utilize. I would say on the issuing side, a slightly different side of the pie, right? So the question is once you've helped your merchants and or your consumer gain access to the fund that's required, how do you shorten the cycle to allow them to get access to that fund as quickly as possible? Right? The solution that many software provider are moving towards right now is either embedding and building in bank account directly into their software product and or provide like a cash out like employee payment card so that tips can be accessible immediately, right? Like your payout at the end of the day does not have the 2-day delay on ACH and all of this stuff. So the convenience factor allow for some of the software provider to evolve from just payment acceptance to also be issuing their own mechanism of distributing funds, aka card, right? So they distribute bank account, they distribute card, and I think that convenience itself puts you in two part of the pie, both as the acquirer as well as the issuer. And being an issuer means when your consumer go out and spend, you're making money out of every dollar that they're actually spending. And that revenue from interchange, what we've seen is a lot of software provider that goes as part of that workflow. What they do is they take the funds and revenue that's generated from that to create more value to build back into their software system to give it back to their merchants and other businesses they work with. So, I think it's definitely a revenue opportunity. It's a loyalty hook, I think, for the end user, as well as a huge convenience factor, I think, for both the business and the consumer side to gain access to their funds faster.
Yeah. I want to talk about this fintech tendency to try to like move fast and break stuff. It's kind of like the Silicon Valley thing or whatever. But
Yeah.
like
Yeah.
that culture, that move fast culture, like how does that play with bank level risk management?
Um, Uncomfortably, I would say. It's a little bit of a unnatural union. But, like I would say there's no such thing as an unregulated credit card or, bank account out there. And behind every single one of those card or bank account, for the most part, like it requires a bank relationship, right? It's a question of how visible and how good are the control on the bank side to know exactly what the fintechs are doing. And so the way like I think about it is that like compliance and regulation when it comes to issuing, when it comes to bank account, all this stuff, like it's not a barrier, it's a feature. Right? You have to kind of think about it as a feature. Those are the things that needed, like the structures that needed to be there in order for us to be able to offer the services on an ongoing basis as seamlessly as possible. Right. And so what we try to do a lot at Synctera to kind of like help our fintech understand is bank as a regulated entity, there's expectation on compliance, there's expectation on fraud, there are rules that needs to be reviewed, there's due diligence, KYC, all those stuff that needs to be done. And those are not things that you want to skip when you're bringing financial solutions to the end user, because essentially banks has to do two things really, really well. They have to know who their customer is, and you do not jump through the hoops for that. And you have to know where their money is. And we have to be able to track that to the pennies, like to the sub pennies even. So I think once the fintech have that appreciation, is then the other side of allowing the bank to understand the use case of what those fintechs are trying to unblock, right? What are the areas that actually are risky? What are the areas that are simply exploration and are not things that needed to be controlled or managed to the nth degree, the way like a regulated, like compliance, AML, or something else is, right? And so kind of creating that distinction and helping with the translation, I think is where some of the like uncomfortable conversation come from. But, the best banks that we work with, they start with understanding what the fintech wants to do and understanding the use cases first, instead of saying, hey, regulatory compliance is XYZ before understanding whether or not the use case is relevant for it. And I think the best fintech out there understand that they're moving into working with a bank that require, compliance, it requires like due diligence, it requires like the level of like control and fidelity that is expected from a bank. It can be done, but I would say like, we've seen a lot of situation where it's it's unnatural and a little uncomfortable.
I want to talk about bank and fintech partnerships and what a good version of that looks like, but also
Mhm.
what it means that we're seeing a lot of fintechs chasing banking charters. So that's got to create some awkward situations if those go through.
Yeah, I think some of the large fintech, right? Like if you talk about like PayPal, for example, right? Like they get their own bank charters, but there's always going to be way more fintechs that does not want to chase their own banking charter and will need the bank relationship in order to be able to, kind of deliver the services. I think that for the most part, the banks who are still in like sponsor banking and are supporting fintech are becoming more aware of this is not a one size fit all, right? And they're becoming more aware of the kinds of fintech and use cases that they want to serve and solve for, and the ones that are out of their range or appetite from a compliance or risk perspective, right? So I think that what that is creating is some gap probably within just our financial system and area where the banks don't have a lot of appetite for it, but there's a lot of demand for the fintech side. That's where stablecoin, I think, has picked up quite a bit of momentum, just at least when it comes to like financial money movement with international payment, it's faster settlement, right? And so there's definitely still gaps in our financial system that even if you take all the use case that banks have appetite for and what the fintech wants to do, there's gaps that are not being solved for today.
Yeah. Well, Ellen, I could ask you a million other questions, but I know you're a busy person. So I think we can end it there. But Ellen, thanks for joining the conversation today.
All right. Thank you so much. Great chatting with you.